Welcome to the Deep Dive. Today we're going to be cracking open Trading to Win by Ari Kiev. We'll be your guides through the mental game of trading. Not so much the charts and graphs, but the stuff going on, between your ears.
It's fascinating how much psychology plays into trading success. This book really gets into the mind of a winner, and it might surprise you.
Yeah, I went in thinking it would be all about strategies and systems. But it turns out knowing what to trade is only half the battle. This book, it dives deep into the who are these super traders, mentally speaking.
You might think it's all about raw intelligence, but the book busts that myth wide open. It's not about being the smartest person in the room. Really, it's about how you handle the heat of the market.
Okay, so what does a winning trader look like, psychologically speaking? Give us the inside scoop.
Well, picture this. The market throws a curveball. A trade goes south. A winning trader. They don't panic. They have this unshakable conviction in their approach. They're also flexible, able to adapt to the ever-changing market landscape.
So it's like a mental agility, being able to shift gears without getting thrown off course.
Exactly. And here's the kicker. They're not afraid to admit when they're wrong. They cut their losses, learn from their mistakes, and move on. No ego involved.
I'm starting to see a pattern here. It's not about clinging to every trade. It's almost like they're emotionally detached, but in a good way.
You hit the nail on the head. The book highlights how top traders often have a low correlation to holding periods and dollar volume, meaning they're not married to a stock just because they love the company or they've held on to it for months.
Wait, so the buy and hold forever mantra isn't all it's cracked up to be? That's going to surprise a lot of people.
Right. It turns out these master traders are masters of letting go. They cut losses quickly and let winners run, trusting their strategy over their emotions.
So as we're unpacking all this, I have to ask, how do your own trading habits stack up? Are you riding those emotional waves, or are you in control? This is a good moment to grab a pen and paper, jot down some of your tendencies as we go.
Self-awareness is the first step toward mastery, so that's an excellent suggestion. Now, the next big idea the book tackles is the power of commitment. And it's not just about wanting to succeed, it's about making a bold promise to yourself.
A promise. Like even if you don't know exactly how you'll get there, you're committing to the end result.
Precisely. The book emphasizes the importance of promising a result. Even when the path is uncertain, it's that unwavering commitment that unlocks hidden potential and fuels the journey.
This reminds me of that story in the book about Max, the trader who kept hitting a profit ceiling at $300,000. He just couldn't break through that barrier no matter how hard he tried.
Right. Until he made a conscious commitment to push past his self-imposed limit. It wasn't about finding some magic formula. It was about shifting his mindset. He promised himself he'd hold on to winning positions longer, and that's when everything changed.
So he changed the game by changing his promise to himself. It's like a mental contract, a way of rewiring your own expectations.
Exactly. And that's a powerful takeaway for all of us. What are you truly committed to achieving in your trading journey? Is your current strategy designed to get you there? If not, what promise do you need to make to yourself to unlock that next level?
That's a question worth pondering. Now, I've got to admit, this next concept completely threw me for a loop. We're diving into the world of risk, but the book's take on it is totally counterintuitive. It turns out, super traders aren't the daredevils I imagined. They're fundamentally risk-averse.
I know it sounds paradoxical, right? You'd think these market wizards would be all about chasing those massive wins, but the book reveals a different story. The best traders. They're laser focused on minimizing losses, not maximizing profits.
Okay, so how does that actually play out in their trading? How do they put this risk aversion into practice?
Well, the book dives deep into that with its 31 basic risk management guidelines. One technique that stood out to me is called scenario planning. It's about mentally preparing for any outcome before you even enter a trade.
Scenario planning. Tell me more about that.
The book suggests visualizing 3 potential scenarios for each trade. The best case, the worst case, and the most likely. By walking through each scenario, you're essentially pre-programming your mind to handle any eventuality.
That's fascinating. It's almost like pre-experiencing the emotional roller coaster of the trade so that you're not caught off guard when things get bumpy.
Exactly. It's a way to detach from the emotional intensity of the moment and make more rational decisions. It's about being prepared, not paralyzed.
This makes me think, when is the last time you really evaluated your risk tolerance? Are you being overly cautious, missing out on opportunities, or are you taking reckless risks that could blow up your account? This is a moment to get honest with yourself.
Honesty and self-awareness are essential in this game. And speaking of unlikely allies, the book reveals something else I didn't expect. Teamwork. It's not just for Wall Street firms, it's a powerful tool for even individual traders.
Teamwork in trading. That's not something you hear about every day. I'm intrigued. Tell me more.
You see, the book suggests that even solo traders, they can benefit from bouncing ideas off someone else, getting a different perspective.
Oh, I get it. It's like having a second set of eyes, a sounding board to challenge your assumptions and keep you honest.
Exactly. The book shares this great example of Dick, this fearless trader who was brilliant but lacked discipline. He partnered with Milt, who was much more cautious, analytical.
So it's like they created a training dream team, combining their strengths to overcome their individual weaknesses. That's brilliant. This has me thinking, who could I partner with to up my trading game? Someone to offer fresh insights, hold me accountable, maybe even just someone to celebrate the wins with.
It's definitely an avenue worth exploring. And the book doesn't stop there. It dives into another challenge that might be lurking in the shadows. Fear. It's the elephant in the trading room, the one everyone tries to ignore.
Oh, fear. That old friend. We all know it can mess with our heads, but how does it specifically sabotage traders, according to the book, I mean?
Well, unexamined fear can lead to all sorts of self-sabotage. It can make you blow up your account with impulsive trades, or it can make you so cautious that you miss out on golden opportunities. It's like fear is whispering in your ear, steering you off course.
It's like that saying, fear knocked on the door, faith answered, and no one was there.
But in trading, it sounds like fear often barges right in and takes over.
And here's a twist. The book reveals that the fear of success can be just as paralyzing as the fear of failure. Sometimes we're subconsciously afraid of what success might bring. More responsibility, higher expectations, a shift in our identity.
Whoa, fear of success. That's a mind bender. I've experienced that in other areas of life, but I never thought about it in the context of trading. I wonder if that's been holding me back without me even realizing it.
It's a possibility worth exploring. The book challenges us to shine a light on those deep-seated fears. What are your deepest fears about trading? How are they influencing your decisions? Once you identify them, you can start to dismantle their power. That's powerful stuff, facing those fears head on.
Yeah.
Now, the book also talks about achieving this state of centered trading. What exactly does that mean?
Imagine a martial artist in the flow, reacting instinctively without letting emotions cloud their judgment. That's centered trading. It's about finding that inner balance amidst the chaos of the market.
So it's almost like a Zen approach to trading, quieting the mental chatter and those emotional roller coasters that can lead to bad decisions.
Precisely. It's about training your mind to stay focused, present, even when the pressure is on. The book suggests practices like meditation, visualization, to cultivate that inner stillness.
Okay, I have to confess, when I first saw breathing exercises in a trading book, I was skeptical. But now that you mention it, it makes perfect sense. When we're stressed, our breathing gets shallow, erratic, which just fuels the panic cycle, right?
Exactly. By consciously slowing down, deepening our breath, we can actually calm the nervous system and regain control. It's like hitting the reset button on those fight or flight responses.
So it's not just about breathing. It's about hacking your nervous system to stay cool under pressure.
I like it. And the book also dives into visualization. Isn't that something athletes use to improve performance?
Yes, visualizing success isn't just wishful thinking. It's a powerful technique for priming your brain for peak performance. When you mentally rehearse those winning trades, those scenarios where you stay disciplined and execute your strategy flawlessly.
You're basically creating a mental blueprint for success. Is that right?
Precisely. And the book emphasizes that it's not just about seeing the outcome you want. It's about feeling it, too. It's about embodying the confidence and the emotional state of a winning trader.
So you're not just picturing yourself making the right trades, you're feeling the satisfaction of those wins, the calmness under pressure. That's amazing. Now, the book also delves into a phenomenon that I think a lot of us can relate to. Losing after winning. Have you ever noticed that? You have a killer day and then suddenly,
It all goes downhill.
yes, like you're cursed. Why does that happen? The book suggests that success can breed complacency. We get overconfident, let our discipline slip, and suddenly we're making those same mistakes we swore we'd never repeat. It's like our brains get addicted to the dopamine rush of winning, and then we get sloppy.
Oof, it's that classic, I've got this mentality, and then bam, you get knocked down a peg.
Yeah.
So how do you avoid falling into that trap?
The book stresses the importance of staying vigilant even when things are going well. Don't get seduced by your own success. Keep challenging yourself, refining your strategy, and never stop learning.
So it's like you're celebrating those wins, but not letting them go to your head. You're staying humble, hungry, and focused.
Exactly. Complacency is the enemy of growth. Now, on the flip side, the book also offers guidance on how to bounce back from those inevitable losing streaks. Because let's be honest, we all experience them.
Oh yeah, those losing streaks can be brutal. It's like the market is testing your resilience, your commitment to the game.
And the key, according to the book, is to shift your focus. Instead of dwelling on past mistakes, prepare for future wins. Analyze what went wrong, extract the lessons, and use that knowledge to refine your strategy.
So it's about turning those losses into valuable lessons, not letting them define you?
Precisely. And remember, maintaining a positive mindset during tough times is crucial. Recall those past successes, tap into that confidence, and visualize yourself getting back on track. Reframe those setbacks as opportunities for growth.
It's like that saying, fall 7 times, stand up 8. But in trading, it's more like analyze your losses, refine your strategy, and come back stronger.
Exactly. And sometimes the best thing you can do after a series of losses is,
Step away from the screen, take a break.
you got it. Clear your head, recharge your batteries, and come back with fresh eyes, a renewed perspective. When you're burnt out, emotionally drained, you're more likely to make impulsive decisions.
It's like hitting the pause button on the trading game to regroup and come back stronger. Now, this next section really resonated with me. Promising the result. I love the idea that just by making a bold commitment.
You tap into hidden reserves of energy and motivation.
Yes. It's like setting that intention actually sets things in motion. It reminds me of that line from the book, it's not so much hard work as it is promising yourself to realize an uncertain goal and then doing what it takes to reach that goal.
Powerful, right? It's about aligning your actions with your aspirations, and that alignment requires more than just willpower. It demands strategy.
So what does that look like in the real world of trading? What are some tangible ways to embody this promise?
Well, the book offers a few interesting approaches. One that stands out is the idea of making that extra call.
Making an extra call, as in going beyond your usual sources of information.
Exactly. It's about digging deeper, seeking out diverse perspectives, and expanding your knowledge base. It's about being proactive, not passive, in your pursuit of information.
So it's not just about reading the same news articles and following the same analysts as everyone else. It's about going the extra mile to uncover those hidden gems of insight.
Precisely. And by broadening your information landscape, you naturally boost your confidence in making those trading decisions. Because knowledge, as they say, is power.
And speaking of power, the book also emphasizes the importance of trusting your intuition. Isn't that something that's often dismissed in the world of finance?
It is. But the book argues that intuition is a valuable asset, especially in trading. It's that gut feeling, that inner voice that often knows the right move, even if you can't logically explain it at the time.
I know some people might scoff at the idea of using intuition in trading. They might see it as, woo-woo or unscientific. But isn't intuition really just a combination of all your experience, knowledge, and observations?
You nailed it. It's like your subconscious mind processing all that data and sending you signals. And the book encourages us to hone that intuitive sense, to trust those gut feelings more often.
So it's not about throwing logic out the window. It's about integrating intuition into your decision-making process. It's about trusting your gut as much as you trust your charts and graphs.
Exactly. And speaking of integrating different aspects of yourself, the book reminds us that trading isn't just about the mechanics, the charts, the technical analysis.
It's about understanding the psychological game, those emotional undercurrents that can either propel you forward or drag you down.
Precisely. The book challenges us to examine our own beliefs and behaviors, to see how our past experiences might be impacting our present trading.
So it's like those unconscious patterns, those limiting beliefs about money, success, or even failure that can sabotage our best efforts.
Exactly. And the book offers a powerful reminder. Those beliefs are often just stories we tell ourselves, not absolute truths.
And once we start to question those stories,
We can start to rewrite them. We can create new narratives that empower us to trade with confidence and clarity.
Okay, let's shift gears for a moment and revisit the critical topic of risk management. I'll admit, when I first saw the book's 31 Basic Risk Management Guidelines, I felt a little overwhelmed.
It's a lot to take in, but don't worry, the book breaks it down in a clear and concise way.
Good to hear. What are some of the most crucial guidelines that jumped out at you?
Well, there's the classic advice about setting stop-loss orders, which are predetermined points at which you exit a trade to limit your losses. It's like having a safety net to prevent those catastrophic losses that can wipe out your account.
Stop-loss orders, the trader's best friend. What else?
Diversification is another big one. Don't put all your eggs in one basket. Spread your risk across different asset classes, sectors, and even geographic regions.
Diversification.
Yeah.
It's not just a good idea, it's essential for long-term survival in the market.
Exactly. And the book emphasizes the importance of having a clear exit strategy before you even enter a trade. Knowing when to get out, whether you're winning or losing, is crucial.
That's a great point.
Ah.
It's easy to get caught up in the heat of the moment and forget your exit plan. But having that plan in place beforehand can help you stay disciplined and avoid those emotional decisions.
And one of the most powerful guidelines, in my opinion, is this one. Don't double down on losers. It's so tempting to try to chase those losses, to make back what you've lost.
Oh, I know that feeling all too well. But doubling down on a bad bet rarely ends well, does it?
No, it usually just digs you deeper into a hole. The book wisely advises to stick to your plan, cut your losses, and move on.
So the key takeaway here is that risk management is not about avoiding risk altogether, but about managing it intelligently. It's about protecting your capital so you can stay in the game for the long haul.
Precisely. And that brings us back to that crucial element of self-awareness. Are you truly managing your risk, or are you letting fear or greed dictate your moves? It's an honest conversation we all need to have with ourselves.
That's a powerful point. It's not just about protecting your capital, it's about protecting your emotional well-being too. Now, I want to circle back to something we touched on earlier, teamwork. The book's emphasis on this surprised me.
It's an often overlooked aspect of trading, especially for individual traders.
But the book argues that even solo traders can benefit from collaboration and mentorship. It's like having a trading buddy, someone you can bounce ideas off of, someone who can offer a different perspective, or even just hold you accountable.
It's like having your own personal trading coach in your corner. And the book shares some really inspiring examples of successful trading partnerships, like the story of Dick and Milt.
Dick, the fearless but undisciplined trader, and Milt, the more cautious and analytical one. By combining their strengths and balancing each other out.
They were able to achieve greater success than they ever could have alone. It's a powerful reminder that we don't have to go it alone in this game.
So for those of you listening who are flying solo, think about it. Who could you partner with to enhance your trading? Who could offer a fresh perspective, challenge your assumptions, or even just help you stay motivated? Could be a game changer.
It's an investment worth considering. Now, the book also provides valuable advice for those in leadership positions, those who manage teams of traders. It emphasizes the importance of creating a supportive and collaborative environment.
A space where traders feel empowered to share ideas, take risks, and even make mistakes. Because let's face it, mistakes are inevitable, but they're also valuable learning opportunities.
And the book really stresses the power of mentorship, of guiding those younger traders and helping them develop those essential psychological skills.
It's about passing on that hard-earned wisdom, those lessons learned from both triumphs and failures, so the next generation of traders can avoid those common pitfalls.
Exactly. It's about creating a legacy of success, not just for yourself, but for those who come after you. Now, the book also delves into some fascinating strategies for pairing traders, for creating those synergistic partnerships where the whole is greater than the sum of its parts.
It's about matching complementary skills and personalities, like pairing a risk taker with a more cautious analyst, or someone who excels at short-term trades with someone who's better at long-term investments.
The key is finding those combinations that create that 1 + 1 = 3 effect. It's about leveraging those individual strengths to amplify the team's overall success.
I love that. Now, another crucial aspect the book dives into is the impact of stress on trading performance. And let's be real, trading can be incredibly stressful. The markets are constantly fluctuating, the stakes are high, and the pressure to perform can be intense.
Absolutely. And when we're stressed, our bodies go into that fight or flight mode. Our heart rate increases, our breathing gets shallow, our minds race, and we're more likely to make impulsive, emotional decisions.
Not exactly a recipe for trading success. So how do we manage that stress? How do we stay calm and collected amidst the market madness?
The book offers some practical strategies for mitigating that stress. Things like taking regular breaks, getting enough sleep, exercising regularly, and practicing relaxation techniques like deep breathing and meditation.
Wait, isn't that what we were talking about earlier with centered trading? It all ties together.
Exactly. It's all interconnected. Taking care of your physical and mental well-being is essential for making sound trading decisions. When you're calm, focused, and in control, you're much more likely to make those smart, strategic trades.
So it's not just about mastering the markets, it's about mastering yourself. Now, the book also digs into some common fears that can sabotage traders.
Like the fear of losing money, which is probably the most universal fear among traders.
Yeah, no one wants to see their hard-earned money disappear. What other fears lurk in the trader's psyche?
Well, there's the fear of missing out on opportunities, that classic FOMO that can lead to impulsive decisions.
FOMO, the fear of missing out. It's not just a social media phenomenon, it's a real threat in trading, too.
And then there's the fear of success, which might sound counterintuitive, but it's a real thing. Sometimes success can bring unwanted attention, responsibility, or even a shift in our identity. And those fears can lead us to self-sabotage, to hold ourselves back from achieving our full potential.
It's like we're subconsciously afraid to step into that next level, afraid of what might be waiting for us on the other side.
Exactly. So the book encourages us to confront those fears head-on, to examine them, understand them, and ultimately transcend them.
It's about facing those fears, not running from them, and realizing that they often lose their power when we shine a light on them.
Precisely. Now, another insightful section of the book explores common trading mistakes. We all make them. It's part of the learning process.
Oh, for sure. I've made my fair share of trading blunders. But, as they say, experience is the best teacher, often through painful lessons.
And the key, according to the book, is to identify those patterns, understand why we make those mistakes, and then develop strategies to avoid repeating them.
So it's not about beating ourselves up for our mistakes, it's about learning from them and using them as fuel for growth. What are some of those common pitfalls that traders fall into?
Well, one that stands out is averaging up on a short position. It's that temptation to keep adding to a losing position, hoping it will eventually turn around.
It's like doubling down on a bad bet at the casino.
Exactly. And as the book reminds us, this rarely ends well. It's usually a recipe for bigger losses.
So the lesson here is to accept the loss, cut your losses, and move on. Don't let hope cloud your judgment. What other common mistakes do traders make?
Another classic mistake is getting emotionally attached to stocks. We fall in love with a company, we believe in its potential, and we hold on for dear life, even when all the signs are pointing to a sell.
Oh, I've been there. It's like falling in love with a stock and then refusing to see its flaws.
Exactly. And the book encourages us to be more objective, to detach from those emotional attachments, and to make decisions based on logic and strategy.
So it's about separating your heart from your head, at least when it comes to trading. What other trading traps should we be aware of?
Another pitfall the book addresses is overtrading. It's that urge to constantly be in action, to chase every little opportunity that comes along.
Oh yeah, the constant itch to hit that buy or sell button. But isn't there wisdom in that saying sometimes the best trade is no trade at all?
Absolutely. The book reminds us that patience is a virtue in trading. It's about waiting for those high probability setups and avoiding those impulsive moves that can erode your profits.
So it's about being selective, not impulsive in your trading. It's about choosing quality over quantity.
Exactly. And another mistake the book highlights is ignoring your stop-loss orders, those predetermined points at which you exit a trade to limit your losses.
Stop-loss orders are like that safety net that prevents you from falling too far. But it can be tempting to ignore them when you're hoping the market will reverse in your favor.
Right. But the book reminds us that those stop-loss orders are there for a reason. They protect you from those catastrophic losses that can wipe out your account.
So it's about trusting your plan, sticking to your strategy, and not letting those emotions override your logic.
And here's another common mistake: neglecting to track your trading performance. It's essential to keep a detailed record of your trades, both the wins and the losses.
Like keeping a trading journal. I've heard that's a valuable practice, but I've never been very consistent with it.
Well, the book emphasizes its importance. By analyzing your past performance, you can identify those patterns, those strengths and weaknesses that will help you refine your strategy and improve your results. It's like having a feedback loop that helps you constantly evolve as a trader.
So it's not just about making trades. It's about tracking, analyzing, and learning from every single trade you make. It's about being a student of the market and a student of yourself.
Exactly. Now, the book also delves into the psychology of greed and how it can lead to costly trading mistakes.
Greed, the trader's ultimate nemesis. That insatiable desire for more, that inability to be satisfied with your profits, I can see how that can be a dangerous trap.
Absolutely. The book reminds us that greed can cloud our judgment, leading us to take on too much risk or hold on to winning positions for too long, hoping for even bigger gains.
It's like that old saying, greed kills. So how do we keep greed in check? How do we find that balance between ambition and prudence?
The book suggests that it's about finding that sweet spot between pushing yourself to achieve ambitious goals and knowing when to take your profits off the table.
So it's about enjoying the journey, celebrating those wins, but not letting greed drive you off a cliff.
Precisely. It's about recognizing that there's always another trade, another opportunity, and that preserving your capital is paramount to long-term success.
So greed management is as important as risk management. Now, the book also stresses the importance of self-awareness in trading.
Yes, knowing yourself, your strengths, your weaknesses, your emotional triggers, it's all crucial to making sound trading decisions.
It's about understanding how your mind works, how your emotions influence your actions, and how to manage those responses effectively. It's about becoming the master of your own mind.
Exactly. And one of the most powerful tools for developing that self-awareness, according to the book, is journaling.
Keeping a trading journal where you record your thoughts, feelings, and observations about your trades. We talked about this earlier, but it's worth emphasizing its importance.
Absolutely. It's a way to track your progress, identify those patterns, those recurring thoughts and behaviors that might be sabotaging your success, and ultimately become a more conscious and intentional trader.
So it's about becoming a student of your own trading psychology, using your journal as a tool for self-discovery and growth.
Now, the book also encourages us to seek out feedback from others, to get those outside perspectives that can help us see our blind spots.
It's like having a coach who can offer valuable insights and adjustments, helping you see the game from a different angle.
Exactly. And don't be afraid to ask for feedback from those you trust and respect, even if it's tough to hear sometimes, because constructive criticism can be the catalyst for growth.
It's about being open to feedback, willing to learn and grow, even if it means facing some uncomfortable truths about ourselves.
Now, one final theme I want to highlight from the book is this idea of embracing the unknown.
Trading is inherently uncertain. The markets are unpredictable, there are no guarantees, and we're constantly facing the unknown. That can be exciting, but it can also be terrifying.
And the book encourages us to lean into that uncertainty, to embrace it as part of the game. Because when we try to control the uncontrollable, we set ourselves up for disappointment and frustration.
It's about surrendering to the flow of the market, trusting that even when things feel chaotic, there's an underlying order, a rhythm to the madness.
Beautifully said. And it's in that surrender, that acceptance of what is, that we often find our greatest trading insights.
So it's not about fighting the market, it's about flowing with it. It's about embracing the uncertainty and using it to your advantage.
Precisely. Now, the book offers some powerful strategies for cultivating that sense of surrender. Things like practicing mindfulness, focusing on the process rather than the outcome, and letting go of the need to be right all the time.
Because in trading, you don't have to be right all the time to be successful. It's about being right more often than you're wrong, and it's about managing your risk so that those inevitable losses don't wipe out your wins.
Exactly. It's about playing the long game, staying disciplined, and trusting that with the right mindset and strategies, you can achieve lasting success in the market.
And that brings us to the end of our exploration of trading to win. Wow, this has been quite a journey.
So many insights, packed into this book.
It's like we've decoded the DNA of a winning trader.
And hopefully you're starting to see how these psychological principles can be applied to your own trading journey.
Absolutely. So let's recap those key takeaways that can help you level up your trading game.
First and foremost, remember those essential traits we discussed earlier.
Unwavering commitment.
A disciplined approach to risk management.
A deep understanding of your own psychology.
And a willingness to challenge those limiting beliefs that might be holding you back.
It's about mastering, both the inner and outer game of trading.
The technical skills and the mental fortitude.
Now, here's a thought-provoking question to leave you with. Trading to win was written before the rise of all this cutting-edge technology that's transforming the market.
Algo trading, high-frequency trading, the whole landscape has shifted so dramatically.
So it makes you wonder, how has technology changed the psychological game of trading?
Has it amplified those emotional pressures? Made it even harder to stay disciplined and avoid those impulsive moves?
Or has it perhaps created new opportunities for those who can master those tech-driven strategies?
It's a question worth pondering as you reflect on your own approach to the market.
Food for thought, indeed.
So until next time, keep diving deep, keep seeking knowledge, and keep pushing yourself to become the best trader you can be.
And remember, the most profitable trades are often the ones we make in our own minds.